Hello, class, and welcome to our 12th lecture series on financial accounting or principles of accounting. And I am your instructor, Dr. Jamal. Today, we are starting a new chapter named The Treatment for Plant Assets, Natural Resources, and Intangible. So, this would be our last lecture series, and we will be completing our asset side. So, remember, the asset sides include, we already talked about cash equivalents, we talked about treatment of account receivable, we talked about treatment for inventory, and now we are talking about the long-term assets. Okay, so our first learning objective is measure and account for the cost of plant assets. So what are the costs for plant assets? We'll talk about that. So I was explaining the last lecture of our assets, because assets contain current assets and long-term assets. So today's lecture is all about treatment of long-term assets. So there are three kinds of long-term assets. Number one, plant assets. Number two, net. And number three, intangible. So plant assets include land, building, machinery, equipment, furniture and fixtures, and land improvements. So what do we mean by land improvements? We'll talk about in our coming, I think, slides. But land improvements are like you improve the land, you are making pathways, you are making ramp, or you are making fencing, or you are installing fencing around your land. All these are land improvements. Natural resources, if you have mines, coal mines, iron ore mines, all right, salt mines, just like that, or gold mines, silver mines. So this is called natural resources. Intangible assets are, for example, trademark, patents, copyrights. These are called intangible. So the expense on our fixed assets, we have to take them on income statement. All right. So remember, there is no expense on land. Why? Because the land value always appreciate, do not depreciate. So land is not depreciate. So all the other plant assets, their value decreases with time, and we call this depreciation. So plant assets are decreased in values, and those values we transfer to income statement, and we call this depreciation. All right. What do we mean by natural resources? So the amount of extraction that we extract from our mine, we call this depletion. The treatment is same like depreciation, but just name is changed, and that will be added to our cost of goods sold, because we mine it, we take it as a raw material, we convert into finished good, and then we sell. So natural resources depreciation is a part of cost of goods sold, and we call this depletion. All right. And depreciation or decrease in the value of intangible assets, for example, value of patents and trademarks, we call this amortization. The treatment is the same. These are expense, these will go to income statement, but the name is a little bit different. And one more difference with the depletion expense, and this depreciation would be used in income statement under cost of goods sold. All right, so we'll see, separately, one by one, the treatment of all these three assets. So let's just first start with the plant assets. So what are the cost of plant assets? So the working rule is that the cost of any asset is the sum of all the cost incurred to bring the asset to its intended use. For example, if you buy AC, so should we record AC? If you buy AC for 1600 yuan, does that mean your AC costs, air conditioner cost you 1600 yuan? No. You paid 200 transportation cost, right? You paid 100 installation cost. All those costs would be your cost of AC. So your cost of AC would be written on balance sheet as 1900. So cost includes all the purchase price, if you're paying any taxes, if you're paying any commissions, if you're paying any other thing. So all the costs, the rule is all the costs that you pay until you first time run that asset, or until the first time the asset is run. For example, if you are importing a plant, so all the import costs, transportation costs, cost of the plant, taxes, duties, you paid amount for expert to install it, and then for any installation charges until the first time the plant is being operated. All right. So before, all the costs would be counted as the cost of the plant. So remember, the cost of the asset include all the taxes, all these transportation costs, all the commission you paid, all the legal fees you paid, all the installation you paid until you first time use that, before the first time you use that asset. All right. And if after running of the plant, it's after some days or some years, the plant is just kind of like damaged or something, so that would be maintenance cost. That would not be included in balance sheet. That will be included in income statement. All right. So what is the cost of land? Remember, when you purchase a land, so only that price is not recorded on the balance sheet. Number one, you pay commission, you pay survey fees, legal fees, property taxes, and any expenditures you make the land for first time use. For example, there was an old building situated on that land, so you just clean that land. That also a part of cost of land until it is ready for your use, or until it is ready for construction of your building. All right, until you use it. So before anything that is incurred, any cost that is incurred to make or to prepare that land for your first time use, everything would be included in the cost of land. All right. So let's just take the illustration here. So we have FedEx signed 300,000 notes payable to purchase 20 acres of land for a new shipping site. FedEx also pays 10,000 for real estate commission, 8,000 of back property taxes, 5,000 for removal of old building, 1,000 for survey, and 260,000 to pave the parking lot. So what is the cost of the land? All right. So anything that or anything must be included, everything must be included in the cost of land until the first time you use the land. So all these charges will be included except this 260. Why? Because you use your land to make parking. So that would be, I think that will be also included. No, I was right. Why? That would be the land improvements. So until you use that land to pave the parking, that would be improvement. That would be written as assets, but separate. Right? Like cost of installing fencing, making parking paveways, or installing plants, right, to make it more beautiful. These are called land improvements. The cost of the land would be 324,000, not including the pavement parking. So what would be the entries. So you purchase land for not for 300,000. Your total price is going to be 324,000. So what would be the entry? You paid through notes of payable with 300,000. These all you paid through cash. So what will be the value of the land? Land increased by 324, right? What is the accounts notes payable is 300,000. And how much cash you paid? If you pay through cash or if you pay through accounts payable, let's see, you paid for cash 24,000. This 10,000, 8,000, and 5,000. If you add them, it would be 24,000. All right. So your cost of land is not just 300,000. It's include all the real estate taxes, commissions, not land improvement. So there's a very gray line between what is improvement, cost of improving the land, and what is the cost of land. So remember, the all those expenses until first time the land is ready for your use. So until the land is ready for your use, before installing any pavement or something, all the properties taxes, all the stuff will be included in the cost of land. Or all the fencing expenses will not be included. All the making the land more beautiful, like installing plants, right? These are called land improvements. Now, the cost of building and machinery. So we have cost of construction and cost of purchasing. So land can be acquired two ways. Either building machinery and equipment are to be acquired in two ways. Number one, if you construct it or if you purchase it. So if we talk about the building, we construct it. So all the fees that we pay, taxes, permits, charges, architectural fees, payment of material, labor, manufacturing overhead, and any interest paid on the borrowed fund that is used for construction. That interest also part of the cost of construction, because that land is used for construction. That loan is used for construction, not land, loan. That loan is used for construction. So that interest would be the part of cost of land. Sorry, cost of building. Okay, cost of building. So you are constructing a building, all right? But if you are acquiring the land, acquiring the building, sorry about that. What if you are acquiring the building? So purchase price, all the commission, sales tax, expenditure, first time when you actually use that building before any kind of renovation, whitewash, repairment, before first time, we call this expenditure, and that would be the part of cost of purchasing. Now, cost of equipment, like I told you, purchase price and anything that will be used or any cost that incurred to first time running of the machine or equipment. Before any cost that you incurred would be the cost of equipment. So purchase price less any discount that you receive, transportation, insurance, sales taxes, commission, installation cost, testing cost, and cost of special platforms, if any. If you have any special cost of platform, maybe you need to run the plant, produce some kind of prototype to show your managers, okay, this plant is ready for our mass production. So any kind of special platform, special arrangement before your intended use, all the costs will be included in the cost of equipment. Now, land improvements also part of your fixed assets because their usage is for more than 1 year. So we call this driveways, signboards that you install on the land,